Hey everybody, welcome back to the VIP Financial Education YouTube channel. My name is Matthew Pillmore. I am a cash flow coach. I help people create wealth by cash flow stacking. That process is basically defined as maximizing our assets and our income streams while rapidly accelerating the elimination and initially the reduction of our liabilities. Our expenses are minimal, are minimized based on preventing things that we hate spending money on, things like interest and having a proper tax strategy. But we don't give up the things we love. We certainly like to enhance lifestyle, and that's what this channel is all about. We want to create our ideal lifestyles, and that comes from maximizing our credit. Now, in a previous video, I talked about one of the most cardinal mistakes you can make as you try to build your business, as you try to build your credit, as you try to build your opportunities, and that is to not protect credit by funding your objectives with personal credit card accounts. Make sure you check out that video. It's one of the worst things you can do, and it will destroy your credit. Now, instead, what we did is we used business credit cards, business lines of credit in order to grow our various businesses for the last 20 years, which not only allowed us to borrow $600,000 of unsecured revolving credit safely, but also then pay it off in a very, very short timeline. In fact, in under 18 months, we were able to pay off $600,000 worth of business-related debts. And in order to be able to do that, we very, very carefully managed our different accounts. One technique I want to give you today is all about paying your credit cards in full each and every day. That's right, I said each and every day, not each and every month. So we're going to dive into that in just a moment. All right, guys, welcome back to the channel. Welcome back to the video. Very exciting topic, talking about paying credit cards in full each and every day, folks. Now, this may seem over the top, but there are two unique advantages when you pay your credit cards in full each and every day. Number one, it will give you a total familiarity of your existing spending and create phenomenal habits along with that. So every time I go into my credit card account, when I see a balance, I visit the transaction history and I'm able to see all of the spending that was associated with that specific account. Now, I attach a credit card to each unique project or each unique business. So I know that all of the transactions within that specific credit card are tied to the exact business that I'm thinking about. That way, by avoiding commingling, we're able to really efficiently manage our accounting and bookkeeping each and every year. It took a lot of years to get to that point, and I can tell you right now, by commingling, you're only setting yourself up for a completely avoidable mess. Number two, it gives me an ability to make sure that all of my spending was actually done by us, that it was authorized. And in just the last 12 months alone, we've found 3 separate instances where somebody was spending our money without our permission. We were able to go in and effectively dispute those charges with the bank, and we were made whole again by the bank. That's one of the best things about having access to a credit card, is that you're protected by the lending institution and unauthorized spending can actually be returned to you. Now, every year as I go through my spending, I will pay an account off a little bit more slowly. I don't actually pay it in full by the time it's due. Therefore, I am required to pay interest costs associated with that balance. And some people look at that and think it's a contradiction to what I'm teaching, when in fact it's actually supporting the idea of building your credit worthiness so you can gain access to unlimited amounts of capital over time so that you can continue to reinvest other people's money into the opportunities that you're finding are effective for you. And the reason for that is because when I pay a small amount of interest each year to each lending institution that I borrow or have access to money through, I'm able to go from the sort of loser liability column inside their categorization, inside their personal system, into the asset or revenue generating column as a customer. I become a better customer for them. Think about it. If I pay my balances in full, it doesn't have to be every day, but at least every month, I don't pay any money in interest. I'm taking advantage of a float period that I have access to where I have this free loan. By paying it in full and not paying any interest, I'm simply a liability to that bank or that lending institution, where essentially they're sending me mail that costs them in postage. They have to staff up in order to handle my customer service inquiries. And worse than that is they are then also paying me. In fact, be on the lookout for an upcoming video about why Dave Ramsey is completely wrong about credit cards and why you should be using those in order to get your banks to pay you. I'm going to show you how Chase has so graciously committed to paying $2,000, towards our short-term rental property. That's cold, hard cash, folks. They are giving me $2,000 just for buying this short-term rental. So I'm very excited to share that. Make sure you're subscribed to the channel to see that video and turn on your post notifications so you see when it's actually uploaded. Now, let's dive back into these accounts. So once per year, I will pay interest in order to be taken more seriously by the bank. The bank then looks at me as a VIP customer. They want to take better care of me. Not only do they want to take better care of me by giving me access to more lending products because I'm somebody that they actually earn money from, but my credit scores look better in the meantime while I'm applying for those lending products because the credit scoring formulas also most of the time are going to see this various activity in terms of the utilization and the payoffs, the utilization and the payoffs. And then 1 month a year, they'll see a balance actually report to credit on my personal credit card accounts, which again, I only use for personal related expenses. All business related expenses are going through business credit card accounts, which are invisible to my credit report. So guys, I'm gonna log into the portal of the back end of one of my JP Morgan Chase Bank accounts. You can see again, this is an account that we talked about in our previous video, a $38,693 current balance on that account. Now I do have $39,141 set aside in this total business checking account that will be used to pay this balance in full. But let's assume for a moment that I'm still building my business and it's perhaps even costing me more than what I'm generating each month yet. Therefore, perhaps I can't pay it in full with my existing dollars. This is where debt weapons can come in. You can see on this credit card account, the existing current credit rating, or I'm sorry, the current APR for this credit card account is 22.24% for typical purchases. If I take a cash advance, it jumps it to 27.24%. Horrible interest rates. We know that. I know that if I'm borrowing $1,000, I'm gonna end up having to pay $222 over the course of 1 year in just interest alone, which means that over 4 years, it'll cost me the same in interest as the original amount I borrowed. That's outrageous, completely unacceptable. So instead, what if I wanted to pay this off using a debt weapon account? Now, this exact same bank, JP Morgan Chase Bank, was willing to give me at one point in time access to a $50,000 unsecured business line of credit because I've done such a fabulous job of using the techniques we teach about here on this channel, maintaining well over 800 credit scores for years and years time. And when I go in and I'm paying them interest and they're earning all this money on me from time to time, we're developing a mutually beneficial relationship. And while it may seem that I hate the banks, that's completely the opposite of the truth. Yes, I don't care much for their particular system. I do think that most of them are cheats. And I choose, instead of turning my backs on the banks, to actually keep my enemies closer in this case. So what do? Well, I can transfer, and we're gonna take a quick look at exactly how easy this is, a same as cash availability on a business line of credit that was provided to me to the account that I could make this payment from for a sum of, say, $40,000. Now, I've only attempted to do this one other time, and it did require a phone call because of the size. We're gonna see if it's easier this time around. I'm gonna leave the memo blank this time around. I'm gonna go ahead and put $40,000 in there as a transfer amount. There's a current availability of $50,093.28. This has actually been overpaid by $93 at one point. So we're gonna go ahead and make that transfer now. It says schedule this transfer from this account 1 to the business checking account of 7 in the amount of $40,000 on June 3rd. I'm gonna go ahead with that, and it says confirmation, green check mark. That's usually a good sign. I'm gonna go ahead and visit that same account again, and you can see that the new availability has increased from $39,141.24 to now $79,141.24 with a $40,000 pending credit to that account, which means that I can simply turn around, pay off that $38,693. Now, I happen to know that the interest rate, or APR, on this specific line of credit is 8.8%. So if I were to compare the two different interest costs, I would end up saving 13.44% interest on that amount borrowed. 13% I could save by not allowing that $38,600 to revolve into the next month. And that now resets my availability on the credit card, allowing me access then to the full amount that I originally had available on that account, therefore opening up in another entire month of free lending. You have that float period reset. I don't pay interest on that. And now I pay daily interest on the line of credit. Now, yes, I do have to pay off that $40,000 that I used to pay the credit card off. It's not like that balance simply evaporated and I magically got rid of my debt. Folks, this allows me now to take the income that I'm generating from my business and park it, instead of putting it into a checking or a savings account, against the balance on that line of credit, which is now 40 grand. So that $40,000 is now going to be something I have to pay back. I can park my income against it, reduce the average daily balance, and reduce that daily interest cost with an annual percentage rate of 8.8%. But because I'm saving 13.4%, because I'm actually allowed to reset the clock on that 1 month free lending float period, there are amazing advantages over the long run to me being able to do that. Now, the only reason I was capable of this is because I have done such a great job of managing my overall lender worthiness. The banks love the way I look. In order to look and sound the way the banks want you to, make sure you continue to tune into all the videos here on this channel, guys. Be a subscriber. My question to you is this. In the comments below, go ahead and leave a remark for me. Have you ever used any type of line of credit before that functioned this same way? Same as cash. Money that you could immediately transfer from the line into your bank. This is not a cash advance. I am not penalized for it. It works the exact same way as a home equity line of credit would. It's just not secured or collateralized by a property. So in many ways, it's much safer than it would be if I were actually securing access to a home equity line of credit. It's also a lot less likely to be frozen in the event of an economic downturn. So non-stop advantages, it seems, with these types of debt weapons. Guys, I hope these videos have been helpful for you. Make sure that you continue to build that credit. Make sure you're a subscriber to the channel. Make sure you check out all the other videos. Until we see you on the next one, you make it a great day today. Drop a like and take care.
Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. The first thing you'll do is in the search menu, you'll go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy, and go ahead and select the red button. Immediately it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. Now you can see I've already got a copy open and enlarged here for you to see. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.